Thank you. Thank you. I've started recording. Thank you. Now, it's easy for people to say, what has government done for me? But unfortunately, tax is a legal conversation. And when I say legal conversation, what I mean by that is, it's a one, let me call it a one-edged sword. A one-edged sword just means that you either have to pay or be punished. There is no reversal as to how it is used. It is not, if the government does not fulfill X, Y, Z, then immediately you don't have to pay. No, it's a one-edged sword. It's a legal conversation at that point. Non-compliance could be treated as a crime and could give room for a lot of issues at the end of the day. So as startups, you have to either start complying with the tax requirement, or you immediately just exit the scene, because it's going to get stiffer as you go, as we move along. It's going to get stiffer as we progress. Now, tax is a legal conversation. It is compulsory, as everybody already knows, and because of that, you have to do it. It is not necessarily for a specific good or service. It just generates revenue for the government. It is a legal issue that is guided by law, acts, and sometimes maybe during the military regime, maybe by decree, and therefore makes it compulsory. Now, we have various kind of taxes, whether they are direct, indirect. If you read textbooks, you may see the direct taxes, you may see the indirect taxes, and may see some that are in between. However, I usually do not go that route. I usually talk about the various kind of taxes: the company's income tax, the education tax, the stamp duty, the custom duties, the excise tax, withholding tax, and value-added tax. Then you have the personal income tax, and so on and so forth. There may as well be levies of the local government authorities, which are usually described as levies, that could as well impact you. Now, one of the things with small businesses is that because they are not aware of what compliance is, they tend to overstate some of their expenses deliberately, not knowing the behind the scene conversation around transaction taxes. And what are transaction taxes? Transaction taxes are taxes that are due immediately a transaction has happened. I will give examples as we progress. So let me give an example. If you tell me you have paid ₦1 billion worth of salaries to your employees, I don't have a problem with that, but immediately triggers the conversation around, have you paid the personal income tax? Have you paid what you call pay, which is the pay as you earn? Have you done that? If you have not done that, then we have a problem immediately. Now, it triggers the payee conversation because you should do that. So if you like, tell me you want to pay ₦50 billion salaries to your staff or to your employees. It is completely fine. Nobody is stopping you from doing that. But you must pay the relevant taxes associated with that transaction. And in this case, that is payee. You must have shown evidence that, look, I deducted personal income taxes from my employees and I remitted same to the relevant tax authority, which in this case is the state. So these are conversations that are usually triggered. And so please note that the purpose of this class is to give you the knowledge you need. However, it is not, today will not just equip you to be able to sit down and have a conversation with the tax authority and tell him, okay, come and look at my books. No, just give you what you need. If you have more questions, that is fine. However, know what you're supposed to do. Take note of the word. I have always used the word tax compliance, not just tax payment. Tax payment is one leg. Tax compliance encompasses a lot in deeper issues. Payment, filing, keeping adequate records, paying as at when due is a lot. So what is value-added tax? Simply put, value-added tax is what we call a consumption tax, and it is on goods and services. The rate of value-added tax is 7.5%, and it's most times to get that companies, the tax authority usually calculates your revenue and slams 7.5 on it. However, with adequate documentation, if there is a reason why it shouldn't apply to all your revenue, then you can come forward with it. You must keep records needed to substantiate your position at all times. To reduce your VAT liabilities, the law allows you to claim VAT input. VAT input, now please note, this is for those who sell goods. VAT input is the VAT paid at the point you were purchasing either your raw materials or your finished product. At the point you were purchasing the goods, the VAT you have paid, the value added tax you have paid, can be used to reduce what we call your VAT output. VAT output is simply the VAT you have charged to your customers on what you have sold to them. Now, you are expected to file VAT returns on or before 21st of the month, subsequent to the month of transaction. Now, please take note. Please take note of what I'm saying. Now, for companies, now the law says that when you have a VAT of a revenue of less than 25 million, annual revenue of gross revenue of less than 25 million, you are not supposed to file. But the system is such that immediately you register for taxes and regularize your tax identification number, immediately what happens at that point is that when your profile is uploaded, your tax compliance list, the taxes you're supposed to pay immediately comes out, or you're supposed to comply with comes out. So you will naturally have VAT with the specific calendar date at which you are supposed to pay, or you're supposed to comply, or you're supposed to file. So automatically, immediately your profile is uploaded, it comes with those list of taxes you're supposed to comply with. And VAT is obviously one of them. So if you have not filed for January, it tells you have not filed for January is outstanding, February is outstanding, March is outstanding, April is outstanding. Now, if you have not complied, what does the law say? The law says for every month you fail, for the initial month you fail to comply, you have a penalty of 50,000. And subsequently, as long as the compliance, you still don't comply, you have to pay 25,000. So what I have done here is to give you a table of penalties calculations to say if you have not filed for January, after February 21st, you're already owing 50,000. And if you have not filed for January up to December, 25,000 compulsorily for that period, from March till December. If you have not filed for February, from March, we start counting 50,000. And for every other month, you have 25,000. And if you check this table of rate for 1 year that you have not filed, we are having about 1.925 million. Now, the law does not exempt whether or not there was a transaction or not. It really does not exempt anyone. As long as you don't file, the penalties keeps counting. And the problem with these penalties is it's on your tax pro. If you know what tax promax is, it's on tax promax, and on tax promax it just calculates like a computer. It is programmed to calculate it, and whenever you wake up and you go there, you will see what the penalties you are owing. Now, there would also be additional penalties for non-payment. So if you are supposed to pay, let's say 50,000, let's say your VAT is 500,000, for example, in a particular month, it will calculate additional interest and additional interest for non-payment of those VATs. Now, the second thing we need to talk about is what we call withholding VAT. Now, we could use self-charge VAT, withholding VAT, or I think in some countries you will hear the word like reverse charge. What does self-charge VAT mean, or withholding VAT? For oil and gas entities, government entities, and lately for some entities that were appointed by just the FRS because they have the right, whenever you get an invoice or there is a transaction, you are supposed to remit the VAT directly to the tax authority, which is the Federal Inland Revenue Service, directly to them. So it means that you are not supposed to pay the VAT to the vendor. And this These entities include oil and gas servicing, government entities, that is government ministry parastatals, and lately, certain organizations that have now been appointed by the FRS to help them collect the VAT. The reason why government usually does this is VAT is the easiest tax you can collect, because when you hold some people, they will come up. As long as you have consumption, you can easily collect VAT. So that is one leg of what we call the withholding VAT. Now, the second leg of the withholding VAT is this, which is the self-charge VAT, is that when there is a transaction upon which VAT has not been charged, either because you are dealing with an entity that is small, that cannot charge VAT because it's small, and their revenue is less than 25 million in a year, their gross turnover is less than 25 million, or you are dealing with a non-resident company, a foreign entity that cannot charge you VAT because they are not in Nigeria, then you have to by yourself go to the tax authority and self-declare that transaction and remit the VAT to the federal government. You will have to declare it by yourself. Please note, taxes in Nigeria is on self-disclosure. What that means is you disclose yourself. Nobody's running after you. However, whenever you come forward by yourself, there will be further questions to be asked. Now, let me tell you how it gets tricky and why small startups should get involved in this tax conversation. Number one, if you don't do that, any day the government has the Federal Inland Revenue Service usually have access to your bank accounts. If they want it, they will get it. Now, if in the past I have always wondered, how do they get it? Because I am not sure how they usually get it. But in recent times, there is a new law that have just been signed that states clearly that where there is a transaction, I think for individuals for 5 million and for companies for 15 million in a year, transaction within the bank account of 15 million and above in a year, within 14 days within 14 days to the month subsequent to that, to the preceding month, all banks shall submit to the tax authority the details of those transactions. So let me give you an example. If I move money out of my account or there is money in my account that gets up to 5 million, the bank is obligated by law to report that transaction, not just to the CBN or to the EFCC or to the ICPC as previously required by law. Now they are required to disclose that same transaction to the tax authority. Now this is where it gets scary. After that provision of the law, the next provision says the FRS, the tax authority has the right to administer this provision as they deem fit. In other words, they have the right to ask for more information. They have the right to ask for a layer of information that the law has not even anticipated. So it's not as simple as we say, oh, 15 million came into company ABC or company XYZ account. If that company is not compliant, the tax authority has a right to ask for more details. One, they have a right to, and they have done it before, to instruct that the bank account of that bank account be frozen, and it will be frozen. Whether it's right or wrong, you have to comply first. And these are issues that will come up over time. Now, you can go to court and prove this thing, but the law is clear. For you to fight these issues, for you to come to equity, you must come with clean hands. This is what gets people into trouble. Every time they will tell you they don't have transactions. We don't have transactions. Now, because you don't have transactions, it does not necessarily mean you won't file, especially when tax promise has the obligation for you. Now, when you don't have transactions, usually the tax authority will now request for a bank statement that shows that there is no transaction. Most times when they now see that there is a bank statement, that there was an inflow into your bank, they will now use that inflow as your revenue and demand for VAT on that inflow. Now, is it possible to get away from it? Yes, it is possible. However, you will need to substantiate with a lot of evidence and come up with a position. Now, the next thing we have to talk about is VAT. Is withholding tax, sorry. Withholding tax is a transaction tax as well. Now, withholding tax is an advance payment of income tax. It's an advance payment of income tax. Let me explain what that means. I am a company XYZ is a company. The law is saying that whenever there is a contract with another person, anybody, with another company or with an entity, and they have to pay me, they will have to deduct withholding tax at an applicable rate. In the next slide, we'll see what the applicable rate is, depending on the nature of the transaction, and remit to the relevant tax authority. So for companies, it will usually be the FIRS. For business name, it will usually be the State Internal Revenue Service, depending on their location. They will remit the withholding tax to the relevant tax authority. Now, what that does is that in future, when company XYZ wants to pay tax, hello? In future, when that company wants to pay their taxes, that is, and by taxes, I mean CI, company income taxes, they will have to, whenever they file, a differential will be applied. What that means is, if they have a withholding tax of 1 million naira already on their profile, if they have a tax of 8 million to pay, the tax authority will only demand for 7 million because they already have 1 million to pay. Now, if their company income tax is probably, if their withholding tax on their profile is probably 10 million and they need to pay 8 million, then they won't have to pay anything. As long as it is on their profile, they won't have to pay anything. This ensures compliance and monitoring. It ensures that everybody is compliant. Why would, if the tax authority already has your taxes that have been paid on your behalf ahead of you, why are you going to evade taxes? It's unnecessary, because if you don't come forward, okay, they just hold your money and move on. Nobody really cares. But if you come forward, you just use it. So most times the conversation is usually withholding tax is an advance payment of income tax. It is not a final tax. In most cases, it is not a final tax, and it is just an advance payment of income tax. Now, for startups, what is your obligation? Now, for startup, you have a responsibility or an obligation to deduct withholding tax from your vendors. If someone supplies you goods or supplies you a service or offers a service to you and issues you an invoice, you have an obligation to remit the withholding tax to the relevant tax authority. So you can't go and be negotiating, how far are we supposed to remit withholding tax, or we are not supposed to remit withholding tax. The law doesn't even provide for that. And this is the principle of law. When a law is clear or is clearly stated, any contract that tends to subvert that provision of the law, to the extent of that subversion, will be seen to be null and void. So even if you sign a contract, I will not deduct withholding tax from you. You sign it. It cannot stand before the tax authority. It cannot stand because the provisions of the law does not exempt it. Now, what are the kind of transactions? Now, depending on what you want to call it. For dividends, you will have 10% across, whether they are resident or non-resident. For interest is 10%. Royalties is 10%. Commission is 5% for resident entities. For non-resident entities is 10%. Please note, non-corporate is business name. Please note, non-corporate is business name. Then consultancy is 5% for resident entities and 10% for non-resident entities. Non-resident entities are foreign entities. Foreign entities. Management fee has 5% for resident entities. And for non-resident entities, you have 10%. Professional fee for resident entities is 5%. For non-residents is 10%. Please note that this table of rates was introduced, I think, July 1st last year and was gazetted, I think, around October. So, and in line with the gazette, it clearly states that if you have, it takes effect from 1st of January 2025. There have been old rates that were always applicable. I think contract of supply of goods was 5% and contract of service was 5%. Always for construction, I think at a point construction contract was 2.5, but please note, construction contract was in terms of building bridges and not necessarily just fixing things up, so that we don't model things up. Now, where you don't pay the withholding taxes, there now would be penalties for non-payment and penalties for non-deduction. And that is where it gets complicated. In the time past, if you don't pay, the tax authority comes back and say, come and pay, and they will charge you penalties. But now, if you can show that you paid fully if you paid the full amount to the vendor, you will have to pay an administrative charge. Now, please note, in line with the withholding tax regulation that was approved July 1st last year, came out July 1st last year, and that became operational January 1st this year, where an entity does not have a tax identification number, then you are mandated to deduct and remit ×2, double the withholding tax. So you are mandated to deduct and remit double the withholding tax. So in other words, ×2 of the withholding tax. Now, let us go further and say this. And that's why I said it's getting tighter. That's the first provision. As we progress, the tax bill that was signed, was it last week or 2 weeks ago, provided that where an entity transacts with a company that is not duly registered or that does not have TIN, they will be liable to a penalty of 5 million naira. Now, the application of that is subject to the interpretation of the tax authority. What do I mean by that? So if I deal with company ABC, XYZ, MNX, for example, 3 companies, and 3 of them does not have TIN and they are not duly registered, are they saying I would pay 5 million for all of them, or I'll pay 5 million for the 3 of them? That's 15 million. Again, application I think it would be 5 million per vendor. Wherever you transact with a vendor that is not duly registered, you are liable to a penalty of 5 million. That means going forward, nobody is likely going to transact with anybody without it. And if you issue an invoice without the tax identification number, it could even be rejected. Now, tax authority have always argued that when an invoice is issued without a tax identification number, it should be rejected. However, this law that puts penalty simply means that because business owners do not want to fall into trouble, they would have to comply immediately. Any questions so far? Please note, withholding tax is not an extra tax. It should be deducted from the payment that is being made to the vendor. It should be subtracted from the payment that is being made to the vendor. Gloria, you are raising your hand. Any question?
Yes, thank you very much, Victor. Good evening, everyone.
Good evening.
Okay, so my question is this. You mentioned that if a business does a transaction with a vendor who doesn't have the SIN number, who is not maybe tax registered and all that, the company will be fined or so. So, for businesses whereby activities you want to do and the kind of vendors you find, especially all those kind of small activities, that the kind of people you will find are people who are not actually registered business. How do they expect those businesses to then get those problems solved or something? That was not very clear to me. Please, if you
Come
could
again
just
with your question.
interpret a
Come
bit
again with your
about
question.
that.
There are businesses that are not registered.
Yes, you said when a company does a transaction with maybe a vendor whose business is not registered,
Yes.
and
Registered for tax
hence
purpose.
they are not
Yes.
able to. Yes, yeah. Hence they are not able to maybe sort of disclose or collect the withholding tax or whatever. So a lot of businesses, small businesses here in Nigeria are not registered. So if I have a company and I want to do some maybe plumbing services or something, repairs in my office or so, and I use the vendor who is not sort of registered, why will I be fined for him not paying his tax or something? Please, could you just
So,
make that
so
clear?
first of all, I think that's what they're trying to discourage. Number one, I think Nigeria. Okay, I may not be able to speak for other developing countries, but for developed countries, I think Nigeria is probably the few countries where you can do business without registration. And I think the CAC 3 or 4 weeks ago came out to say it's an offense to actually do business with an unregistered name. You are not an individual. If you're an individual just carrying on repairs, maybe being employed, that could be fine. But if you are plumbing, you should register a business. You are free to register a business name, a corporation, that's your choice. You are free to do that. But not registering it at all is a problem. And now, if you register it with the CSC, you automatically get in. So you just need to go to the tax office and regularize your tax identification number. So CSC have answered by saying not registering your business and then continually doing business is not it's not right. So those plumbing services could as well be registered. At least there's someone doing something. They should be registered. They should, and that is what government expects. Otherwise, they may not be able to track the number of businesses we have and the number of people that are probably employed. Someone else has his or her hands raised.
Hello, good evening. Thank you
Yes,
for
I
the
did joking.
session.
Thank you.
My question is this. I have a registered tutoring firm, but the tax payment stuff got a bit complicated at a point. I got registered this year, January, and I started probably money started coming in, say February, March. So the tax promax stuff already billed me for last year that I have to pay tax for last year, whatever that was. But that was sorted. And then when it was time for me to file in for, when I started, I didn't quite understand how to do it. I was told to pay before 21st of that month or something. So when I went to their office, they kind of resolved it. But in the process of trying to pay that, fill that form online, I found out that tutoring firm are not supposed to pay tax. I got confused, so I'm not sure what is obtainable anymore. Am I supposed to pay tax? Am I not supposed to pay tax? The tax office was telling me that I'm supposed to
What tax are you talking about? You
the
keep saying
VAT.
tutoring. You
Sorry?
keep saying tutoring. Now, let me be clear here. Let me be clear here. You keep saying tutoring. I know that under the VAT Act, educational service. Hello.
Yes, please. I'm with you. I'm with you, please.
I know what you have heard. However, I am not sure the details of what has happened so far. But this is what I have to say. You keep saying, is it an educational institution?
Yes, it
Because
is. We provide online services for kids.
for kids. So now, in line with the VAT Act, educational services are exempted for VAT purpose. They are exempted. Educational services are exempted for VAT purpose. So
Okay.
I am not sure what they found out and how VAT was calculated, but
Yes, I'm with you.
we can talk about that later.
Okay. All right. Thank you.
That's just it. Yeah.
Okay.
Any other question? Nobody's hand is up, so I continue. But again, this is where it gets tricky, and this is why I'm having this conversation. Whenever the taxman comes to you, if you're not talking from an informed position, you are lost because all he wants is the money. He's not going to force it out of you, but you're going to have to pay. And that is, and yes, you probably are still going to file. However, you can just file is exempted services. And what do you do? At that point, you have to provide how were you registered? What are the documents you were registered with? Were you registered as an educational institution or you were just registered for general business purposes? That would create another issue. If you are registered as a educational institution, do you have the various educational licenses for that? That is where that will be another round of questions. Where all these things are not fulfilled, then it becomes a lot difficult. We move on. Now, I think she has talked about VAT, the road to her, she had to pay VAT. Now, as you progress at after year end, what they will come back to you on is what we call the company's income tax. Companies' income tax are levied on companies or corporations, as the case may be. Companies. Now, you have done businesses for a year, or as the case may be. At the end of the year, you are expected to prepare your financial statement, prepare your tax computation, get it audited, and submit to the relevant tax authority. And submit to the relevant tax authority. Now, at that point, whether there was a profit or loss, remember we said tax is self-disclosure. You are the one who makes those disclosures. Disclose your income, disclose your expenses, disclose your assets. If you like, say you've never made revenue, it is fine. Submit it. And you're supposed to do that on or before 6 months after year end. So if your year end is December, by on or before 30th of June, you should file your tax returns. Otherwise, you are going to have penalties of 25,000 for the first month, and 5,000 for subsequent months of default. So if you have not done that by July 1st, you are owing 25,000. And subsequently, August, you are owing 5,000, additional 5,000, which is 30,000. And it goes on for the next till you finally file. Now, for non-payment, if you have any tax due that you have not paid, there will be additional penalty of 10%, and I think another 33%, another percentage based on CBN discount rates, which at the moment is at 33%, and that gives you about roughly 40 something percent. And this is why it's getting harder. Because it is done on Tax Pro Max, sometimes the penalties are way higher than even the taxes itself. So the tax authority is very happy to calculate the penalty and collect the penalties. Now, for you to get waiver, it's not as simple as going to the tax office. You probably have to apply to Abuja and all that, and that is not as easy as you think it's going to be. So most times it's hard, it's difficult to do. So most times you have to comply because there's a tax on Tax Promo is always there. Somebody have to probably switch it off or take it off as the case may be, and so that creates a lot of issues. Now, when you file, remember I said you will disclose your income. You are the one who disclosed. You will disclose your expenses. You are the one who disclosed. My very first line today was you have what we call transaction taxes. These are taxes that originate because of a transaction, such that if that transaction is cancelled now, that tax will not hold effect. Withholding taxes fall into that category. If I issue an invoice to you, pay me, and tomorrow morning I said, ignore it, don't worry about it. It was issued in error. Nobody will talk about withholding tax on that particular transaction. If you say you are not going to have staff and you will not pay salaries to anybody, nobody is going to talk about pay or personal income. You remitting pay to the relevant tax authority, it's over, it's lost. If you don't have revenue, nobody is going to, if you can prove that you don't have revenue, nobody is going to talk about VAT. For the self-charge VATs or withholding VAT, if you are not having transactions that are imported, or you are not dealing with small businesses that cannot pay VAT, then nobody will ask you to go and self-charge yourself. So immediately the transaction comes. Now, immediately you submit your tax returns. Now, the law is they have to accept it. Now, when they accept it and they will have to check, oh, this one said they have expenses of 10 billion. Are they withholding taxes for these expenses? It's a yes or no. They can check tax promax and realize, oh, this one did not remit withholding tax. Now, immediately it triggers a desk review to say you did not remit withholding tax for XYZ. Please go and remit as in the next either 7 days or in the next 30 days, as the case may be. And you either have to remit, or if you're not going to remit, you have to explain why that transaction should not have withholding tax. And you have to submit your evidence. Now, that means that you have to keep appropriate records. You have to have appropriate documentations, and you must be able to prove your point. So as we move on, we have the personal income tax. If you pay salaries to yourself, you pay salaries to your staff, you have a responsibility to remit the personal income tax to the State Internal Revenue Service. And I'm using the word state because it may not just be Lagos State, it could be other states, Edo states, Abuja, Kaduna. Now, remittance is based on where the staff who you are paying is residing, their state of residence, not their state of origin, their state of residence. And you have to make that payment on or before 10 days after payment of salaries to the staff. So immediately you pay the staff, maybe on the 31st, on the 1st, on or before the 10th day of the next month, you should remit the personal income tax. Now, you have done that for 12 months, January to December. The law provides that on or before 31st of January, you should file what we call a payee returns that shows the number of all the staff that worked in your company from January to December, their tax ID, if they have tax ID, their gross pay, there's a form, their gross pay, their personal income tax on those gross pay, as well as the taxes you have deducted. This has to be for the full year, and as well as evidence of payment of those taxes. You're supposed to submit it to the State Internal Revenue Service. So if you pay to Edo, if you pay to Delta, pay to Rivers, pay to Lagos, you will do that for each state and submit to the relevant State Internal Revenue Service. Failure to do that, if you don't do that, by 1st of February, you are owing 500,000 naira. If you don't do that on or before 31st of January, you are owing 500,000 naira. Now, please note, there could be times where maybe because of rush, the state government can decide to give an extension of additional 20 or 30 days, and they've done it before. Please note that where there is an extension, the law provides that that extension only relates to that particular tax for that period and does not extend to other taxes or other years. unless they announce for other years. It does. If Lagos State now say, please don't, if you have not submitted, we give you a grace period of additional 20 days or 28 days. Submit on or before February 28th, will be fine. Does not now mean that next year you have to go and file on or before February 28th. No, they just gave a grace period that is for that period, and everybody moves on. Except they announce for the next year, it does not apply anymore. You cannot hold them accountable for other periods. Otherwise, you are owing 500K. Now, to wrap up this session, I'd like to talk about common mistakes businesses make. Common mistakes business owners make that can create tax liabilities. Common mistakes businesses make, and why it creates tax liabilities. Number one, not keeping appropriate records or source documents. They just do transactions, no records. They just tell you we have expenses or we have salary of 10 million. There is no payroll. There is no contract to the employee that states that, oh, this is what I will be paying you. Nothing. They don't keep appropriate records. They can just give instruction with their word of mouth. Please pay 5,000 to my brother. My brother will transfer it to my mother. No records kept. And then because there's no records, they depend on the brain. Oh, please, this was what happened. That's an error. It has to stop. If you want to build a business, you must keep appropriate records and documentations at all times. There are reasons for these records. I'll give you an example. Some of this, I know of someone who last 2 years ago, I think the FRS wrote to her that she has a tax liability for VAT to come and pay. I don't know how she settles it. So that was 2 years ago. Last year, she sold her shop and closed her shop, actually. They wrote to her again to come and pay another amount. She has sold it. She has moved on. But she still went back to start negotiating what to do. Now, the business have closed. They will still keep writing to her. No records. She doesn't have records of anything. They just write to her, pay 10 million. I know of someone else who lied to the tax authority that, oh, she only have one bank statement, and tax authority went behind the scene to unearth other bank statements and charged her VAT of over 10 million naira. And of course, because she has said she has no bank statement and tax authority have brought out other bank statements, of course, she will have to start begging and looking for what to do. Meanwhile, if she has kept appropriate records, she would have been able to know what each bank stands for, what each inflow stands for. And the tax authority is not your friend. Once they see any inflow into your bank, they would think it's revenue and will tax it. This is where it gets tricky. In August I think around February or March this year, the CBN gave out what we call open bank license. Open bank license means that before we have UBA, Standard Chartered, Access Bank, you do every transaction on a bank by bank basis. So if I want my bank statement, I go to Access Bank, I pull out my bank statement. If I want Standard, I pull out my bank statement from Standard Chartered. If I want Stanbic, the same thing. Now, with an open access, with an open banking license, what that means is with the bank that has that license, you can see all your banking transactions on that app or from the bank's portal. That is where it gets tricky. So, which means that if the FRS is writing to Access Bank to submit my bank statement, they can as well write to the bank that has open license to submit all bank statements relating to me. Now, whether that is right or wrong, or whether that violates your privacy, would be depending on a legal argument that nobody wants to get involved. So if you're not keeping proper records, it will throw out. Now, this is my problem. They said if you have a transaction of 15 million, they are supposed to disclose. I agree. Access Bank discloses. Standard Chartered discloses. That's easy to see. Because if the bank with the open banking license if they have to disclose my transactions, that would be tricky, because if I move money from bank A to bank B and bank B to bank C, that is 3 transactions. Are they able to understand that if I move 5 million from bank A to bank B, from bank B to bank C, and from bank C to bank A, that's 3 transactions, 15 million. Are they going to report that transaction as 15 million, or they're going to report that transaction as 5 million? Whatever you think will depend on what the with whatever the tax authority believes they want to do. Because if the tax authority sees 15 million transaction, they are going to fight, they are going to ask for their VAT. But if you call it a 5 million, it's going to make a lot of difference. Now, this is why you have to keep records. For small businesses in Nigeria, you usually get inflows into your bank, and that's fine. Now, I know of businesses who probably they are selling, let's say, perfume. You buy perfume from them, you pay delivery fee. So if perfume is probably 25K, you probably pay delivery fee of 3.5, which is about 20. So you pay 28,500. They give you perfume and use the delivery man. Now, if the tax authority sees 28.5, they would want to tax 28.5 as revenue and subject it to VAT. Now, if you don't keep appropriate records, you will not be able to understand that, no, my revenue is 25. The other 3.5 was delivery fee that was probably paid to a bike man or somebody who's taking Uber to go and help me deliver to my customer. And I just used one transaction that gave you 28.5. Imagine 10, 20, 100 transactions, 360 transactions that happens in a year. That would create huge liability for you. You have to keep appropriate records. Number 2, not registering for TIN or not regularizing your TIN. I've told you what to do. If you don't register for TIN or regularize your, if you don't register for tax or regularize your TIN, then your withholding tax, first of all, would be double the rate, and then after that, the person dealing with you will have to pay additional 5 million as penalty to the tax authority. You wouldn't want to put your customers in that position, and you yourself wouldn't want to be in that position. The third thing is when you merge business account with personal account. We keep saying this thing, and I think this happens only in Nigeria, where I just wake up one morning and somebody wants to send me money. They send it to my business account, and I move it from my business account to my personal account. That route, people even post their business account on Twitter for people to send them money. It is wrong. Whenever the tax authority sees money into your business account, they assume it is revenue. Now, whether you think it is revenue or it is not revenue, you must substantiate your position. You must substantiate your position. Hello, who? Yeah, I can see a hand raised. What's the question? What's the question?
Okay, thank you. So please, I have 2 accounts for business. I had one first, then the second one. Is it better to just tell all the clients to pay into one account, or what do you advise?
Okay, I'll answer that question. I usually prefer that you have one account that you use to collect your revenue. It's just an advice. It's not compulsory. But if you keep adequate records, you will be fine. I advise you use one account for your revenue, and then the other account, you just move money to your other account and use it for your expenses. That is because it's usually easier to trace and track. One is your revenue account, the other is just for your internal dealings. Maybe use it to take a loan or something. But please note, you will still need to keep track and keep records, because that bank that you're using to collect your revenue is more likely to give you a loan. Am I correct?
Yes.
So because of that, that's why you have to keep records. The day that bank gives you a loan of 1 million, or let's say 10 million, the tax authority will see 10 million and want to tax 10 million. It's a loan. Move on. It's a loan. So just for understanding, you can set up a system, use one bank for your revenue, not every bank. Sometimes it may be difficult to trace as a startup.
Okay, thank you. And please, the last question for now. Sometimes there is this, when we go to some eateries, after paying for food, they still calculate VAT. Why is it so, please? Some eateries, they calculate VAT.
Okay. Okay. For eateries, I think they have gone to court as a group and they lost it. Now you are saying they shouldn't charge VATs?
I'm asking, I said, why is it so? It's not all eateries that does that, but there's this particular eatery we go to, when they calculate for food, they still calculate VAT.
Some are high, they are highly tax compliant, and they will need to charge VATs because they remit that VAT. I think some of them went to court and lost it because they argued that they were selling food, and I think the tax authority told them it was processed food that they were selling, and as such they should charge VAT. And for them to be compliant, they now started charging VAT. Therefore, it's okay for them to do that.
Okay, thank
Coach
you.
Amarak. Hello,
okay,
Coach.
good evening, Mr. Victor. Thank you so much for the class. So my question, you mentioned something when you were talking. You talked about registering for TIN and also regularizing TIN. I want to understand what regularizing means.
Oh, okay, hold on. In time past, you need to go and register for TIN, tax identification number. Complete some forms, submit to the tax authority to get your TIN. Now, I think if you register with the CAC, I think from 2021, if you register with the CAC, you immediately get your tax identification number on the spot. So I think tax identification number comes with your. It comes with your.
I started noticing that with 2025 registrations, that it's actually on the certificate.
It's
Before
on the
now,
certificate.
I had to
Yes.
personally register for TRN.
You have to good. Now, regularize. Now, the fact that your CSE form has a tax ID or tax application number does not mean that it is recognized. You have to go back to the tax authority for your profile to be uploaded, and that's what I mean by regularization. Yes. So yes, you can have TIN, but it's not working. If I search for it, I won't see it.
Oh, okay. So how do I search to check that my TINs are regularized and working?
It's a website for TIN validation.
Okay.
There's a website for TIN validation where you can search for your TIN and get it. Yes.
All right. Another question. So most of my TIN transactions, I've actually worked personally with my lawyer. So for instance, like the tax returns, she tells me that, oh, so and so company is due for tax returns. And then even when maybe I haven't done transactions on the company, I just ensure that my tax return is up to date. So is that okay, or is it necessary that I have to do it personally and I have to liaise with FRS because I've not had to go to their office all this while?
This is what I advise. You can outsource it, which you have done. However, because it is done online, have an idea of what they file on your behalf, because it's like an immigration service where I apply for visa for you and I tell lies on your immigration document. It would impact on you sooner rather than later. You know what I mean? So have an idea of what they have filed and ensure that you sign off. It's just a risk management measure where you know. Number two, I know of someone who has tax pro max but does not have access, and I was like, why? The day that person is not available, what happens to you? And you need to file. So I just think, yes, they can do it if they have the knowledge. If you are sure they have the knowledge, it's fine. They can do it. They are consultant. They will know what to do. However, have access to the portal, view the portal, know what it is saying, ensure that payments are made as at when due, because whenever there's a penalty, it will fall back on you.
Okay. Okay. I would ask for access. Thank you so much. Thank you for the class. It's been really helpful.
Yeah, thanks. Obaro.
Yeah, Victor, thanks for the class. I think the breakdown is quite explicit and very fine. So I remember you mentioned that VAT is quite easy and straightforward. Yes, I agree with you. Now, for withholding tax, you agree with me that it's not straightforward as well. So prior to the new laws that will change, a lot of people used to hide under open market and then staff transactions. Yeah, so now with this new law, although when I saw the fact that the withholding tax rate was drawn down to 2%, to me is a trigger that these guys they are going to come wide and spread that tax upon anything, everything, and all that. So, on your own opinion, how does the open market operate under this new law? Thanks.
What do you mean by open market? You mean over the counter?
Yeah, so some persons they'll go to the market straight and then buy from the market. You understand? Most of those people in the market that have shade over the counter, yeah, that's exactly what it is. And at
Okay.
the end of the day, okay, go ahead.
So this is what over the counter, I think, was defined by the withholding tax regulation. If it is over the counter, is a transaction that starts and ends on the counter. I come to you, I pay, you give me whatever it is, and I walk away. That is the end of the transaction. You pay on the spot, and it was defined as such. Either you pay electronically
Hold on.
or you
Let
pay
me add a
cash.
little bit of context to it. Sorry. Sometimes over the counter, I'm forced to make those transactions from my from the company bank account.
That is fine.
How does that work?
Electronic payment. Electronically, it's allowed as long as it was done on the spot. There was no transaction. Now, there was no deferred payment in any of them. However, please note, where the tax authority is pushing back is that people will hide under it. You must substantiate that position. So when you buy like that, you need probably a receipt. Or even if you go to like Spar to buy something, when there is an invoice, there will be a stamp that shows that it has been paid off on the spot. Do you understand? You can't just tell that what most people want to do is tell the tax authority it's 20 million. It's over the counter transaction and the tax authority just move on. No, you will substantiate that transaction. And by substantiating, the question I would ask is, where is the receipt for this transaction? A receipt will show that you paid on the spot. It would have date, it would have probably timestamps and everything. What did you buy, quantity purchased, and everything. Number two, it would have what we call, if it's an invoice, it will have stamp. Number two, how did you post it? How did you post it? If it's an over-the-counter transaction, I should be seeing it between bank, cash, or what have you, or the necessary expense. But when that is not the case, then we have a problem. So I know it's difficult to substantiate, it's technical, it's tricky. However, I think you can substantiate it. That's why I say keep adequate documents to substantiate it. An electronic payment on the day of the transaction that ties with the receipt can suffice as an over-the-counter transaction. Hello?
Yeah, that's fine. That's fine. That's fine. So on the other hand, I also mentioned the fact that to manage that, some people prefer to do some of this transaction through staff.
Probably.
Of course,
and then reimburse them.
Okay.
And let them retire. That would be another way to manage it.
Okay, that's fine. I know sometimes too, LRS will come in on that angle and also
start asking
pretend
for
to,
taxes. So this is what I advise. advised that reimbursement should not go through the payroll. Reimbursement should be treated separately. So we reimburse our staff on the 23rd of every month, and we pay our staff on the 30th of every month. A policy in place. So if they see a 21st payment, all you need to do is to say, what schedule is this? Oh, my staff bought for us a TV and we reimbursed him, and that was all. So a policy implementation will be required for that. It's a risk, but you will have to do a lot of work on that. Because whenever the Lagos State or any state government sees payment to an individual, they want their personal income tax as well. So you must be able to substantiate. Yes, we paid this person 500,000, but it wasn't part of his salaries because he has already earned his salary. But you must also know that people have also hidden behind this reimbursement to pay staff salary as well that are not subject to tax. So from both sides, you cannot, depending on the side you are on, you will have to fight for your own end. The fourth problem, the fourth issue, the fourth common mistake is not charging VAT. We have said this. VAT does not belong to you. It is not your tax. It is tax that you collect on behalf of the government and remit to the relevant tax authority. You collect and remit. So you not charging it means you will pay for it. Now, let me tell you why it gets tricky. If you charge somebody 10,000, at 7.5%, the person will pay additional 750 naira. So it means the person will pay 10,750 naira. If you don't charge it and you don't record it properly, the day the tax authority sees 10,750 naira, they will come and say you should pay 7.5% on 10,750 naira. That is where it gets tricky. Now, the difference between that 10,000, 7.5% on 10,000 and 7.5% on 10,750 is huge. Now, maybe it's not huge because of 10,000, it's probably less. But when you do that for a year, when you accumulate all of that for a year, that becomes a problem. If you charge
1 minute, dial star 606 hash to borrow airtime from MTN, or dial star 904 star airtime
Hello, everyone.
Hash directly from your bank.
If you don't charge VAT, there is a problem. That's if you are supposed to charge VAT. Now, please note. Hello. Please note. Where you are not charged VAT on a transaction and VAT is payable on that transaction, you should self-account for the VAT and remit to the tax authority by yourself. Let me tell you why it gets tricky. The new law that was signed 2 weeks ago says, and I quote, that where an expense that is supposed to be subject to VAT has not been subjected to VAT, or the VAT has not been charged or remitted, the expense will be disallowed for tax purpose. So if I come and register and give you a service and I charge you 1 million, no VAT on the invoice, and then you, on your expense sheet, you expense it 1 million. Tax authority says, there's an expense of 1 million. What does it relate to? Whatever you want to call it. Please submit the documentation for this. Was VAT paid or charged? You go and submit the invoice. No VAT. Have you paid the VAT by yourself? No. Disallow the 1 million naira. It is not allowable for tax purpose. Now, whether it was a relevant expense, it is not a relevant expense, the conversation is lost. You didn't charge VAT, it is not it is not allowed for tax purpose. The fifth thing, not deducting withholding taxes from vendors. Remember I said where a law is expressly makes an express provision. Where the law makes an express provision and you violate the law, or you make a provision that violates the law, then that your contract to the provision of that subversion of the law is null and void. Withholding tax is not your tax. It is an advance payment of income tax. You just have a responsibility to remit. So whenever you're discussing contracts, tell them we remit withholding tax. There may be conditions for non-deduction of withholding tax. That is a different conversation. But where it meets it does not meet that condition, go and remit withholding tax to the relevant tax authority. Let them go to the relevant tax authority for their withholding tax and move on. Not deducting pay. Some people do not even discuss pay with their employees. They just pay salaries to their employees and don't remit pay or personal income tax to their employees. That is a risk. When the tax authority come, they will put the responsibility on you and they will charge you penalties. And we have established that penalties and interests would be applicable. And it could even be higher than the taxes you were supposed to pay. Now, payment of taxes to another individual. Now, I have always argued that bank records are permanent records. Bank records are permanent records. They are permanent in nature. It means even if I had a bank transaction in 2014, which is about 10, 11 years ago, I can go to my bank app. If some banks do not allow it, I can write to the bank and say, give me my bank statement from January 1st, 2014 to December 31st, 2014. And I will go to my transaction and I will say, on March 15th, I made payment to John. And there was a 20,000 transfer. You can't deny those records. You can't deny records. Those kind of things have been what have made people liable when it comes to court. They are able to prove that, oh, I have made this payment. Now, for taxes, now, let me explain how that works. Whenever the tax authority sees an outflow, a payment made to someone from the bank, they immediately assume there should be withholding taxes, whether it's to an individual, whether it's to a company. They immediately assume. And that's fine. Now, the problem with that is where you pay taxes to somebody. So you make transfer to me, whatever transfer you have to make. And they see my name. It was taxes, but you paid it to me to go and make it on your behalf. The tax authority picks it up and say, go and remit the withholding tax. This is where it gets tricky. You may not be able to remember that this payment was for taxes. You may not. And if you don't keep records, you will not. And even if you keep records, you can't substantiate it. There are people who probably they employed John. And then when it's time to pay salaries to John, John will say, don't pay salary to my account. My account is blocked. Pay it to Stephen. That's two individuals. You have contracts with John. You're making payments to Stephen. Whenever the tax authority picks it up, they would think, oh, Stephen is your staff, or you're going to remit taxes on behalf of Stephen. Even if you have remitted taxes on behalf of John, it would not suffice for Stephen. You may not be able to explain it correctly that, oh, instead of paying John, we pay Stephen. Because in law, they will be seen as two different individuals. You will need someone who is a bit more understanding to understand, oh, Stephen and John are probably the same person. They are related. They are related. And it's difficult to prove sometimes. Not remitting or filing taxes as at when due. People do this a lot. They don't remit taxes. They don't pay taxes. They just think, oh, they don't even discuss it. We will sort it out when it comes. Again, like I said, the penalties are way higher. Not filing taxes as at when due. For VAT, I showed you the table of penalties. I showed it to you. It's about 1.95 million. Now, imagine somebody that has not filed since 2016. Just calculate it in your head and know what it means. It's going to create a problem. And because it's a tax promax issue, tax promax would create a lot of, would create a penalty. And unless you pay it, you are not moving forward because it's computerized. Whatever you put in it is what comes out of it. Finally, signing contracts without considering the tax implication. Signing contracts without considering the tax implication. People sign contracts. You give jobs to influencers and pay them commission. And then you say it's a valid expense. Yes, it's a valid expense. What are the tax implications? And whenever you have tax implications, these things would need to be done rightly. Any question? Obar, I think your hand was up at a point when I was in number 6. Any question?
Yeah, so thank you, Victor. Thanks for your clarity. The additional question I wanted to ask was it's still on withholding tax. Now, most times when the tax authority come, they look at your CAPEX and slam withholding tax on it. And most times when you are buying CAPEX, the vendor will not ship if you withhold. So that's the problem.
Ship from
So
where?
how do you
Ship from where? Ship from where?
Whether within country or outside or wherever, if you withhold on, especially on CAPEX, they will not allow.
So
They
if
won't
it
give
is
you
from
this.
outside the country, withholding tax will not apply.
But even within Nigeria, most times, maybe you want to buy a laptop from Computer Village or something, and you are withholding, they won't give you.
Hold on. Are you buying it over the counter or there is a contract?
Even when there is a contract, yes, it may be a contract. It may be, but let me say there is a contract, yes. It may not be immediate, although you are going to pay. Not as if you are going to buy it, keep it for a very long time, but they will issue you an invoice.
For you
Then
to go
you
and make
payment.
payment?
For you
So,
to make payment. But when you make payment and then you withhold, they become issues. Yeah.
okay, so I think first of all, you should I would advise you deal with a more tax compliant entity that understands what withholding tax is. Because what it's telling me, that should be a red flag because it's telling me that the company is not tax compliant. Because withholding tax remitted in his name goes to his profile as withholding tax credits. So that should be a red flag. The law provides for it. Alternatively, you could bear the withholding tax. I usually do not advise that because it's not supposed to be borne by you. However, if you insist on using the person, do they have tax ID? Yes. If you don't pay them, if you pay them the withholding, if you pay them without deducting, the tax authority will still come and ask you to come and pay the withholding tax, which is easier, which is better. Do you want to pay the penalties or you don't want to pay the penalties? These are tax risks that needs to be managed and it has to be discussed, talk about it, give them evidence of payment. Let's everything move on. If it is paid to the tax authority in his name, then that should suffice as his payment because it's a credit to his name. It needs to be managed by the tax department or discussed with the finance team. Any other question, please? Any other question?
I'm sorry, Mr. Victor.
Yeah.
Hello, I have a question.
Yes. So thank you once again. Can you hear me?
Hi. Yeah, I can hear you.
Yeah, thank you. Sorry, just a quick one. I don't know if you mentioned this before. So a friend and I, a few years ago, we registered a business with CAC, And for some reasons, after all of this registration, we did not carry on with the business. And so we just left it like that for a long time. We've not done any transaction whatsoever. Would we be charged tax, or is unless transactions have been carried out through that business? Just for clarity, because it's been bothering me for a while.
Have you been registered for tax purpose?
I'm not sure. I don't know. We actually did it through a friend that was a lawyer, and then we got a CAC certificate, but we didn't even do anything
Do
with
any
it.
transaction, because we need to be sure there was
No.
no transaction. So if you have not carried out any transaction, okay, that is fine. But if you are registered for tax purpose, you need to check that there are no outstanding taxes and responsibilities. Now, if you have not carried out transaction, you can write to the tax authority that, oh, we have either ceased operation, we have not carried out any transaction as such, and we don't intend to carry out transaction. And as such, they should probably suspend the registration for now and stop the compliance because there's no transaction. However, they will need to substantiate the fact that there have been no transaction. They will ask for the bank statement of the company.
Okay.
And
so that means we need to kind of go to the tax office before the check.
Yes.
Okay.
I think the law provides for that, for temporary cessation or temporary suspension of the tax ID. And when the tax ID is suspended, the obligations are suspended, no transaction. Please note that with the new tax law, when a tax ID is suspended, the tax authority may write to the bank to suspend every bank account of that so such that nothing comes in, nothing goes out. So don't think, and nobody will literally beat the system. The idea is not to beat the system. The idea is to do the right thing. So that people will not go and apply for a suspension and then use the same bank account to carry out 1 or 2 transactions and move on. No, they may have to confirm from the bank or write to the bank to suspend that account since there's no transaction as confirmed by the client or by the taxpayer, and that will suffice.
Okay, thank you.
Any other question? Yeah, now please note this conversation was on the surface. It was not so detailed. Certain depending on what different taxes could apply to different entities, different complexities, different transactions, the way it is structured and everything. So please note, have conversation. If you have a tax consultant, have conversations. If you want to get in touch with me, that's fine. I'm available. If you want to get in touch with Desi, that's fine. However, ensure that you are tax compliant because the cost of non-tax compliance is usually higher than the cost of tax, the cost of tax compliance. The penalties, the interest are high, and the idea is to reduce the penalties and interest to the barest minimum. If it's zero, fine, but to the barest minimum. There is usually no joy in non-complying, as anything could happen. I've had situations whereby tax authorities have written to people to banks that 1 or 2 bank accounts should be frozen. Now, whether that's right or wrong, you have to come to equity with clean hands first, and that would be the issue. And finally, the mistakes people make. Is because they usually do not care about their taxes, they usually do not even care what is filed for them. Whether somebody, as long as they are not asked to pay, whether I say my revenue is 0 naira, my expense is 10 billion, they don't care. Unfortunately, this could create additional tax liability, even if not CIT. Pay could arise, withholding taxes could arise. And because tax authorities are allowed to talk amongst themselves, FIRS may talk to you and say, okay, this tax is not due to us, and speak with LRS or any of the state's internal revenue service to come to you, and they will get it sorted. Any other question? We have to close the meeting in the next 4 minutes.
Good evening, sir. I have a question.
Okay, Sharon, good evening.
Good evening. Well, I just wanted to ask, like, I felt like you were sharing mostly for taxpayers in Nigeria. I wanted to know if I'm not a citizen of Nigeria, like for me, I'm from Kenya. So I wanted to know how would I apply this information as a taxpayer, as a taxpayer in my own country. And if I want to consult more, how would I go about it? Thank you.
Okay. Now, tax law is jurisdictional. What that means that they are localized in every jurisdiction. So there may be one or two circumstances where they may look alike, but different tax authorities could have different rights. So for Kenya, I'm not very sure what the tax law is. However, if you reach out to me, we could have a different conversation around Kenya and what happens in Kenya. That will be outside the scope of this conversation. I adapted to Nigeria because Nigeria taxes are jurisdictional. If I have a similar class for those in the UK, the conversation will be a lot different because I'll talk about what happens in the UK, US, or what happens in South Africa because tax laws are jurisdictional. So the penalties that may apply in Nigeria may not be the same penalties that may apply in Kenya or in South Africa, as the case may be. So we'll have to have that conversation at a later date, Sharon. Thank you.
All right. Thank you so much.
Any other question? It's great having you here. It's great having you here. If you have any issues, reach out to me. I'll be fine to answer your question. If you're on the WhatsApp group, you can drop your messages on the WhatsApp group. I'll be fine to respond to you. If you want to send me a message, I'm free. I'm on the WhatsApp group as well. And when the group becomes enlarged, if at any point I could move to Telegram, however, I would easily be reachable to answer your task questions and ensure that you are not bullied at any point in time. Be task compliant and have a good day. Thank you.
Thank you.